Well, thank you. Good morning, all. Definitely, it is a great pleasure for me being here. I really celebrate this new boost to relationships between the UK and the region. Definitely, I would say that not so long ago, the region was very well known because of its recurrent debt crisis. Many of these memories are now being seen or resembled by the situation in some of the countries in Europe. So definitely now the situation has really changed. In relative terms, I guess the region is a story of success, and I will just give you some numbers illustrating the current state of affairs in the Latin American economy, especially at these times in which the global economy has the challenge for coming years on growth. You know, basically, unemployment being an important problem in many of its areas, debt problems in key economies worldwide. So the idea is just a 20-minute long presentation, so it will be very brief. So just a few ideas, some numbers to illustrate what's going on here. The key thing is it's to really know that we have talked for quite long about the potential of Latin America to be an emerging economy taken as a whole. No? But well, I would say that this has been there for the last 50 or 60 years, but not until the early 2000s we have seen the region really taking off, at least in the globe from a global economy perspective. No? This graph suggests that over the last 10 years, the region in dollar terms has grown by approximately 160%, which is a thing that we haven't seen in the previous decades. We used to have a Latin American economy of around $1.8 trillion in size by the year 2002, approximately. And now we are about $5 trillion according to the latest data that we have. No? So in dollar terms, this is really an impressive performance. And it's also impressive performance taking into account the performance of the biggest economies in the world. No? There you can find that the black and gray lines, red on the right-hand side of the chart, represent the size of the Latin America GDP as a percentage of the US economy and as a percentage of the Eurozone economy. No? And you can see there that the region used to be approximately 15–16% of the size of these two largest economies in the world, or China. And now we are talking about an economy that is approximately 30–35% of the size of the US economy and the Eurozone. So definitely this is a kind of the so-called catching up experience of the region. And this is, as I said before, this evolution has no precedence in the recent history of the continent. No? It's important to note also that the recovery from the crisis back in 2008, 2009 was very fast and quick. There has been a temporary halt in the catching up process of Latin America to these two economies, but just as early 2009, the LATAM economy started to grow fast and even as a percentage of the biggest economies in the world. No? And also it's important to note that on a per capita income basis, the region has a lot of potential to improve further. No? We are talking about the region that, on average terms, it's about $12,000 annual per capita income, and probably I guess that the region has the objective or the implicit target to get the $20,000 per capita income in the next 10 years. I guess this is feasible, this is probable, and I guess that as my predecessor has said, in terms of the middle class and the social situation in the region, that will make an important change. trying to get at some color in terms of the individual countries. It's also true that there has been a very favorable context for Latin America to outperform in the global economy. Definitely, we have seen structural improvements, a significant increase in the quality of economic policy, more prudence on the monetary front, on the fiscal front, things that that we have experienced since long ago in the developed world, but they were relatively new in the Latin American policy-making history. So this is just to give you an idea in terms of relative performance, that perhaps the quality of economic policy doesn't explain the whole picture of the past 10 years in terms of growth. No? There you can see, for instance, one of the countries that have grown less over the past 10 years is Mexico. Definitely the hit from the 2008-2009 crisis has been bigger than in other countries. The post-crisis recovery has been relatively slow, but definitely Mexico is a place in which foreign investors feel totally comfortable with the direction, in which the governments have been conducting economic policy, prudent behavior in terms of debt dynamics, in terms of banking system supervision. But definitely, it's that the performance relative to other economies in the region has been a little bit disappointing. And on the other side, we can see, for instance, Peru or Uruguay that have grown approximately 160% since the beginning of this century. This is pretty amazing performance. But we also have Venezuela, that we know that it has been a kind of inward-looking economic story, in the sense that they have privileged internal consumption and not a quite supported relationship with foreign investors. So this gives you an idea that the global context has also been important for Latin America, that there has been extraordinary period of low interest rates, in general, at very good commodity prices. You know that the region is a net exporter of commodities. So definitely, it's important to check the global environment looking forward in order to determine if we will continue to see this impressive performance or not over the years to come. We are really confident that the improvement in fundamentals will make a difference looking forward, but definitely the state of the global economy can't be ignored for the entire region when we look into the next 10 years. No? Some other numbers in terms of the social change that we are seeing in the region. This is taking the most important 8 economies in Latin America, and there you can see on the left-hand side, the upper side, the total increase in population since 2005, between 2005 and 2010. There has been a 6% increase in total population in this 5-year period, which is not really that impressive. That means that probably population as a whole in the region is growing a little bit more than 1% annually. Okay, but definitely, given this period of sustained growth, we have seen a significant decline in what is called the poverty rate. The percentage of people that is below what is called the poverty line, a certain level of income that allows people to live in what is called poor conditions or not. No? And there you can see that by 2005, not really that long ago, I mean, I'm not talking about 2000s, no? In 2005, in the middle of this growth process, the poverty rate was approximately 37-38%, and we have converged to 30% in 2010. Now, this is an 8-point decline in 5 years, which is also a very impressive performance. So, if you want to take a measure of, if you want to have a measure of the size of the non-poor population in Latin America, supposedly the kind of people that is active in consumption markets, which is important for investors and companies operating in these local markets, we can measure that the increase in the size of the non-poor population in the region over the past 5 years has been approximately 20%, which is kind of 4% per year, which is a very sustained pace. terms of millions of people, this sample gives you an idea that the jump has been from 260 million people in 2005 and approximately slightly more than 300 million people in 2010. No? So basically, if you want to keep this number, this simple figure is that the consumption market in Latin America is growing approximately by 10 million people annually. 10 million people approximately is 2.5% of the total Eurozone population, which is in terms of inhabitants is a large amount of people. The population growth just per se adds approximately 5 million every year of these 10 million people that we have commented before. And now 5 million become new consumers that they leave poverty conditions behind. So we have heard many times this story of in China, part of the growth process is being explained by the fact that productivity, labor productivity is increasing, for the fact that farms workers are migrating towards the city, and so in the end we are seeing an effective increase in the labor force of the country. So something similar is taking place in Latin America in the sense that people that were absolutely outside consumption markets because poverty didn't allow them to be active there, or they were just having surviving conditions of living. Now they're active, they have enough income to buy a refrigerator or a car in installments, or some basic semi or durable goods. So, and the pace in which this process is taking place is really high and has been surprising for the region, at least compared with the standards that we had before the 2000s. An important thing, taking into account the current state of the global economy, Latin America's model is not a story of growth based on exports, which in the current context would be a little bit dangerous or frightening, taking into account the state of the global economy. It's most biased towards consumption and investment, a kind of domestic demand-led growth situation. The only country in which we can say that exports are really a driver of growth is Mexico. Approximately 40% of the total growth that we have seen between 2003 and 2011 comes from exports in Mexico. But in the rest of the region, you can see that consumption approximately accounts for kind of 50 or 60%. Domestic investment accounts for another 30%, and exports in general play a kind of marginal role. No? So it's important to notice that even though that we may see global economic growth coming slower in the years to come, probably the chances of Latin America to sustain growth near to potential is relatively high, mainly due to the fact that what is really more important for the region is domestic consumption and investment markets. No? In this sense, the fact that the credit cycle in Latin America and in the rest of the world have decoupled is very important. So we have not seen a significant credit crunch in 2008, 2009 when the global crisis took place. We are not seeing significant signs of credit contraction now in this occasion in 2011. So we are pretty confident that even though growth will tend to slow, definitely compared with 2010 standards, the fact that the global economy will not be growing as fast as in the past will not prevent Latin America to sustain a decent economic growth pace. In 2010, we had approximately 6% economic growth. In 2011, probably the year will be ending with 4.5% for the entire region. And what we are expecting for 2012 is a number between 3 and 3.5%, which is decent given the amount of uncertainty that we are getting from the rest of the world. Another important thing that it's worth reminding is that you remember the case in the 1980s in which basically the way in which the Latin American countries had to finance themselves in the global economy, or had the foreign currency necessary to grow, to import machinery or capital from the rest of the world, but was basically foreign debt. You know? And well, the accumulation of that foreign debt from time to time generated crisis, balance of payment crisis, which in the end determined kind of a stop and go kind of economic cycle. No? In the 2000s, the key supply of dollars really changed, and it's not that anymore. It's definitely commodity prices. You know that in the case of Argentina, we have soybeans. In the case of Chile, we have copper. In the case of Brazil, we have a whole basket of commodities, agriculture and metals. In Mexico, we have oil. In Colombia, too. So definitely, producing the same in terms of exports, the significant increase in price of these commodity exports have allowed this balance of payments in the region to have an abundance of dollars or foreign currency that we haven't seen in the past. No? This is a kind of a measure of the cumulative windfall or the cumulative gain in foreign currency generated by commodity prices on a cumulative basis. No? Imagine that this is a kind of debt accumulation, but instead of being debt, which is kind of eventually is a bad thing, it's a kind of accumulation of inflows in which no debt is generated. No? You can see that in the case of Brazil, over the last 5 years, the cumulative windfall is approximately $120 billion, which is a significant amount of money. And other countries, for instance, in Chile, 75 billion, in Argentina, 60 billion. So this is the kind of amount of that I say again, in 1980s, this is the kind of debt accumulation that we saw that in the end generated problems. This is a kind of very sustainable way to finance the region from a balance of payments point of view, and I guess this is what is letting everybody believe that this is a more sustainable situation than in the past. Of course, you will say, what happens if commodity prices plunge and fall 50% compared with 2010 peaks, and they stay there for a long period of time? Definitely the region will have a problem, because part of this windfall is being spent. No? It's definitely not being totally safe. And this is why we have seen this material social change, because governments have more money to embark on social programs, etc. No? But definitely, this is a kind of this way of financing, of getting external financing or external, to put it in a better way, to get external revenue is much more sustainable than what we used to see in the past. Also, it's very important to notice that the country in which this windfall has been lower is Mexico, which is also explains why we have seen a kind of relatively worse performance in terms of growth over the past 10 years. No? This wealth effect has been really important in the growth process that we have seen lately. In terms of financial markets, I really have only 2 minutes to go, but in terms of financial markets, it's important to notice that this kind of growth model has been kind of rewarded during the current crisis. There you can see the now famous CDS spreads, the cost of insurance for default of sovereign debt in these countries. We have 2 categories in LATAM. We have a kind of investment-grade countries, Brazil, Mexico, Chile, Colombia, probably Uruguay soon, and high-yield countries in which we can find Argentina and Venezuela. So in terms of the spreads, the difference is huge. The former are kind of less than 200 basis points of risk. The other one is a little bit higher than 1,000 basis points. But definitely you can see that you can find countries there as France or Spain or Italy or even Ireland, in which the country risk, as it's called, has increased significantly, and this has not led to contagion in the Latin American economy. So this is very important. Definitely, our impression is that if this situation consolidates in the years to come, there will be a significant change, or there should be a significant change in the way rating agencies put the grades there. Definitely, our impression is that in relative terms, many Latin American countries, like these ones that I'm showing now, will have to be upgraded significantly, 1, 2, or 3 notches in the scale, because in terms of fundamentals, the numbers are looking much, much better than what is now the AAA or investment grade global community. And the final thing is a kind of joke, but as I said before, the problem of the 1980s is the debt is this big and only God can repay. This is the Redentor. So This is not the problem anymore. This doesn't mean that there's a significant problems that they have mentioned before, not only political but also in economic terms. In Brazil, we have risks of supply bottlenecks because of public investment is relatively low. In Mexico, we have high fiscal dependence on oil revenue. In Argentina, we have risks of seeing inflation getting too high, as we have seen in the past. In Colombia, we have a kind of current account deficit that says that the national savings are low relative to the amount of investment that the country needs. Definitely, there is a list of potential threats to macro stability. I guess no economy in the world is free of these threats. But definitely, the big problem of the past of going bankrupt, basically. As far as I understand, since 1980, the region as a whole had 45 cases of banking and debt crisis in the entire region. So kind of 45 cases in only 30 years. In the amount we have, as some of, I have a friend that says that Latin America has a PhD in financial crisis, no? And definitely in many cases we are asked some recommendation or advices taking into account what is going on in the Eurozone. But definitely, this is not the problems of the current situation, and definitely vulnerabilities are there. But I totally concede with the view that the region is full of opportunities, and the outlook will continue to be relatively positive in a difficult global economy. So I don't know if perhaps we have margin for only one question, because I have to leave. I have to take a flight, so I will not be able to stay in the panel. So if at least we can get only one question, I can leave in peace.
Juan Pablo is obviously a very smart economist. We've only got one question.
Sorry, Juan from EMC Peru. In terms of trade and commodities, I think that affects most of the Latin American countries. A lot of concern that during the last crisis there wasn't too much of an effect due to China doing inventory and still buying commodities. What's your view for the next possible crisis?
No, there will be a slowdown. Definitely, demand from China and from other Southeast Asian economies will slow down. We are expecting commodity prices to adjust further. Not really that much, but perhaps a slump of 10 or 15% on top of what we are seeing now is likely. And well, the countries will have to adapt to that. No, basically, we will see the need to adjust domestic demand to this new situation. No? Again, we are not sure that the worst of the real economy effects that the crisis is generating, or this second leg of the global crisis, is being priced in by markets. So our view on China and in general commodity prices on metals, especially, is that there's a kind of perhaps more weakness to come. Not a disaster, but more weakness to come in 2012. Okay. Well, thank you so much. Well, we'll see you probably next time you decide to invest or deal with Latin America. Thank you.